Canadian inflation numbers, let's bring in Dylan Smith. He's senior economist at Rosenberg Research. Dylan, thank you for joining us. So you've heard the numbers. I won't repeat them to viewers, but across the board, across the 4 different inflation numbers that were just released, we are seeing weaker than expected inflation and declines from January's figures. What do you think?
That's right. And it's the across the board part there that's very important. Last month we had headline inflation dipping below 3% for the first time, and really good to see that that trend is continuing on the headline. But it's, the Bank of Canada had flagged that core was still staying very high. So very good to see core coming in a couple of points lower than we saw back in January and below expectations. Very good news on the inflation front.
And what does this mean to the Bank of Canada? The logical conclusion would be that our campaign is working and the table is set for a cut to the rate, correct?
Definitely moving in that direction, and I think that's what the Canadian dollar is trying to tell us. Expectations that rate cuts might be shifted a little forward, but the important part is that we need to see what happened on the shelter inflation front. That's where Tiff Macklem has really been drawing our attention. That and the wage data, which have come in a little easier, but are still a source of concern for the bank.
Okay, I'm going to try and get that shelter number. Rebecca has a question for you.
So, last week the U.S. reported inflation and it was stronger than anticipated. Canada is now kind of doing the opposite, softer than expected. So do you see a situation where possibly Canada will start cutting before the U.S., or do you think that they're kind of going to wait and see and then maybe, see what the U.S. does first?
Yeah, there's an interesting kind of global game happening now in terms of who's going to raise rates first. Going into the year, it looked like the U.S. was best positioned for that, and we've seen inflation stall out, while in Canada and Europe, it's actually softened more. So definitely shifting in that direction. But of course, the bank will have to keep in mind that if they do, and as we're seeing with the movement in the dollar now, if they do cut first, that will probably increase import prices in a way that they won't want to see. So there'll still be a lot of sensitivity to where we're in the U.S. It might mean on the margin slightly sooner, but we don't expect, a large easing before the Fed gets around to that direction.
Here's that shelter information you wanted, Dylan. Bloomberg News reports excluding shelter costs, the consumer price index rose 1.3% from a year ago. So that tells you how important shelter costs are. Here are some of the numbers. Mortgage interest costs jumped by 26.3% from a year ago. There's the effect of higher mortgage rates. 26.3% was the increase in mortgage interest costs. Rent, meanwhile, grew by 8.2%. So we still see very pronounced increases in the effective rent. On the other side, key contributors to the deceleration, the coming down, included cellular services, groceries significantly, and internet access services, which all helped offset a year-over-year increase in gasoline prices. So let's go back to shelter. What do you think?
Yeah, so it's a little disappointing that rent prices actually went up compared to last month, and that's something that's going to, puts a bit of a fly in the ointment for these numbers. That said, a lot of these shelter costs are actually sort of controlled by the bank itself, right? They can get mortgage rates down if they start easing, and there is a relationship between mortgage rates and rents. So obviously landlords charging rents to keep up with mortgages. So they do have a lever there, and as long as the core basket is moving in the right direction, it won't be something that completely trips them up. But there are supply issues, as we know, on the rent side, and they'll want to see a little bit of softness, I think, before they're willing to pull the trigger. But things move in the right direction. On
the bank is always very careful in what it says publicly. How do you think the bank thinks about mortgage rates and whether, as you've just said, the bank should exercise its ability to put some downward pressure on mortgage rates by cutting the overnight rate?
It's very hard not to have the housing market at the back of your mind when you're thinking about interest rates. And I think the big fear would be that, a message that we're about to ease, massively reduces mortgage rates as banks start pricing that in, and then you have a surge of demand coming back into the housing market that drives up house prices, that drives up rents, and we're kind of back to square one a little bit on the housing market, even as fundamental inflation goes down. And that's a harder thing for the bank to speak about, but it's something that will occupy a large part of Tiff Macklem's brain for sure.
Do you think in Canada that inflation has bottomed at this point? Because if you look at certain input prices or commodity prices like gold, copper, oil, they're all reaching higher levels this year. So I'm just wondering, how that would relate to CPI. Do you think it's bottoming and then we're going to kind of start seeing it trend higher from here?
Yeah, that's a very good question. There's definitely a bit of upside risk in the short term that higher oil prices especially might start to pull up the goods price component. What's good about the drop in core that we're seeing is that, controlling for those effects, fundamental prices, including services prices, apart from shelter, are actually starting to come down. So those two effects will probably be at play together in the near future, but we'll already keep an eye on the call.